G'day traders, Stacy Burke from Stacy Burke Trading. Continuing our discussion. Today we're going to go and just examine the British pound for the entire week. You can go back and do the same thing for your different pairs that you're trading. We talk about structure, looking to identify any bigger geometrical patterns. It could be head and shoulders, reverse head and shoulders, double tops, double bottoms, three push patterns. We're going to go through those a bit more in the next video. We're talking about the timings and double zeros, the 12 candle window around the equity opening times, and then assessing our risk reward on those trades to maximize our profits and cut our losses as short as possible. So Friday, Monday, we were opened up on Monday inside of Friday's high and low. Friday was obviously a big range day. We had a breakout of a double top pattern on Friday night coming down. That market then again traded on top of a double zero box, broke down inside of that into the close and went sideways. As we come into Asia the next day, obviously the day now has given us a high of the day and a low of the day. And obviously right off the bat, once the high was established, there was a low of the day that took out the most recent swing low. So the market pulled back inside. We now have a new low of the day. As we head into the end of Asia, so this 2 a.m. window where the blue box is the 12 candle Asia window, 1 hour before, 1 hour of the open and 1 hour after the open. The pink box is the end of Asia, first part of Europe, and then London, and then the second hour of London. But again, what I do each day is I mark off the high and low. I look at the previous day in terms of the highs and lows that we're trading inside of. So obviously at this stage we have an inside day, but we're looking potentially at this round number level as our double zeros. And of course, on the bottom, the downside, the market has broken down inside of this lower double zero box, pulled back inside, broke down again. So we have trading taking place inside of two double zero boxes. The market has come off of 50, but in terms of our round numbers, we are trading inside of a 200 pip box. When we head into the Europe London Open, the market goes up to the double zero box, goes sideways. So again, consolidation. This consolidation is important. Now, this market on the 15-minute chart pulls away. No pins on top, no engulfments, just a strong stop hunt candle, stop hunting traders who were long in the Asian session. That market proceeds to move down towards the low of the day. Now again, traders may have been getting into this move midway through that move to the low of the day on shorter time frames, whatever that may be. They may have entered up here in shorter time frames. Again, we get towards the bottom of the lower 100 pip box, and the market again aggressively pulls away before again consolidating into the beginning of that US 12 candle window. Bursts to the high, performs a stop hunt. We have pins on top. We have a pin on top now at the high, the redrawn high of the day at the US Open. The market goes sideways, pins on the bottom, and then a pin hammer at the 50 box in the upper 100 pip box for the measured move back down to the low of the day. You'll notice in this particular case a couple of things. So the market performed a stop hunt but gave us a pin on top and then proceeded to work to the high of that pin and go sideways at numbers. This is critical. And then giving us at the end of our 12 candle window a nice pin hammer at the new redrawn high of the day at the US session changeover. But again, if we go back to the beginning of the day, as the market heads into the close, so we have a 1 bar stop targeting number one, the double zeros first. The market blew through there, blew straight through down to the low. And again, talking about trapped volume, recognize where there's consolidation, where there potentially may be trapped volume for a stop hunt. Same thing on the move down. Trapping volume, creeping trend. We talked about this at the first half of the video. Creeping trend down, pull back, creeper down, bang, one candle traps all that volume. Creeping trend up, 2 candles, 3 candles to the low, 50 pips below the low of the day into the lower 50 pip box before coming back aggressively, stop hunting traders who got in late into the move. But again, into the close of this market, there's a couple of things we want to look at. We see a big drive down, we see another drive down, and we see another drive down. But what we also see is the market pulling up above double zeros, pulling up above double zeros. One more push down, but it stays inside of the double zeros into the US Asia rollover into the next day. So again, inside of the double zero box with 3 pushes to the low and a pin hammer. But also, we'll get rid of this. Now heading into the next day, we have structure. We have a symmetrical triangle at the low. The previous day we were in a range-bound market. We didn't really have any bigger geometry. We were inside of Friday's high and low. We had broken out of an upper rectangle, which, just coming back to targeting a measured range expansion. So people have asked me, what is this tool? It's just the Fibonacci tool on my MetaTrader, but I'll just change this. I've changed my numbers to 100% expansions for that range, and again, larger geometry, 1 full expansion, we can be looking for a potential bottom to be in place. Doesn't mean it's going to be, but that's where our profit target may have taken us. But in this particular case, I would just look right at the numbers and say we're roughly in a 150 pip box, so I would be looking at 150 pips for the move down. Just put our number back on here. So we head into the next day, and again, just for simplicity, again, we can drag this double zero box across because you can see the market went outside of the double zero box, came back inside. 1 push, 2 push, 3 pushes, and 1, 2, 3. But it came back inside and stayed inside at the rollover with a pin hammer. That potentially may have been our low of the day as we head into the next Asia session the next day. We project that double zero box is still valid. We have a redrawn high of the day from the move from the US session coming down. So we're inside of a high of the day and a low of the day. They've come in and stop hunted traders who were long here. They've hit them again with that third push, put a pin down deep into traders who were long at the end of the session. And again, we talked about low bear candle, high bull candle. We're going to project those across as well. We've already taken this one out in the previous session. As I said before, if it trades back inside of that low bear candle or high bull candle, that market is potentially clearing the way for another move through that level. So if we draw this low bear candle across, you can see how the market came on top of that, pinned it one last time before pulling away into the next day's Asian session. So we're inside of a high and inside of a low. The market then goes and breaks through above the double zeros and then auctions back down. We have geometry. We can just draw, use our simple trend lines, breakout, pullback, heading into the Europe London changeover. In our changeover time, we have an engulfment candle for traders to enter and continue that long move up at the bottom of a 100 pip box. for the move to the high of that box. So again, if we were just looking at this in terms of the numbers, we're in a 200 pip box. The double zeros in the middle is the 50 percentile range. We go up, they stop hunt the high, the redrawn high of the day. They pin traders who were short from the previous day's Europe-London changeover. The market pulls back, pins down on breakout traders, consolidates again at the 50, round numbers 50 level, breakout pullback, pin hammer at the end of that 12 candle window on top of 50 for another extension through the high of that double zero box. But I want you to pay particular attention also to this candle right here. You'll notice that it opened, we'll just open that up a bit, below double zeros and crossed into the next double zero box, and that market proceeded aggressively into the upper half of that double zero box before aggressively coming back to stop hunt traders who were long on the breakout. So again, if we drew a high of the day on that pin, which was a snowplow, they broke through that. The pin could now become a flip zone. We bring that across. We're into our new timing box, and at the beginning of that 12-hour US candle window, we get a pin hammer at round numbers. Oops, just bring that up here. Pin hammer at round numbers at the beginning of that 12 candle US window. Again, the market goes up 1, 2, 3. We talked about paying attention if the market goes in 3 bursts. That could be a stop hunt, a blow off, or a potential reversal. Market gives us a little doji at the high. And again, traders who don't take profits off the table or recognize when a trade could fail. This 1, 2, 3 to the high was a stop hunt on traders who may have been short at that first move up to the high. So again, very important when the market moves 50 plus pips, pay attention to how they end that move, or if it consolidates at numbers, you want to be taking money off the table. Again, we had a breakout of our symmetrical triangle, and we'll project our trend line up. Obviously, we have a micro trend line now from the low of the day heading into that session. And that market gave us a trend line break for a retest of the high later in the session. But again, 12 candle window. We had structure for a breakout of the symmetrical triangle. So if we were to just take a measurement of that symmetrical triangle, you can see that 2 times that range took us up to potentially where that market may have found it was running out of steam. So again, we head into the next day on Wednesday. We have our double zero box. They've broken through that. That potentially now could become support. And again, we're not looking back and saying this was ideal. We're looking at structure. We're looking at high and low of the day. We're looking at round numbers. We're looking at price action. And we're looking at the market equity opening times. So clearly, as we went into the next session, we were inside of a double zero box. We had double zeros below. The market had been buying off this level. They came down. They broke through, came down, and then went sideways into the close. We talked about this in a previous video. When a market goes sideways, so this market didn't pull back and consolidate underneath of the high. It stayed sideways into the high. This is a classic potential level 3 sort of trading setup where the market will blow off in the direction of the trend. This is a textbook level 3 type of trade setup. So in level 3, what you'll often find is that the trend traders will be piling on board in this last stage because technically all the EMA, stochastics, what CCIs, Bollinger Bands have this as a trend trade, and it moves fairly aggressively in the direction of the blow off. So again, we see the market in the Asian, towards the end of Asia, breakout of the 00 box and also through the high of the day. And then 1 push, 2 push, 3 pushes down, and an engulfment pattern at the 00s for a breakout into the Europe London opening times. And again, we see the same thing. They're at 50 level. 1 push, 2 push, 3 pushes against the breakout. So traders with EMAs, everything else would be strongly piling into this market. Pin hammer. Just close that. And also timings wise, this is the first candle of that last hour. And then bang, bang, bang. If we wanted to do a measured move on this, we just go high to low. Just bring this down a touch. But basically it's probably 100 pips. That's a 50 pip box. You can see we blow through that 2 times the measurement range, so traders could follow that up however they want to do it. But again, high of the day, breakout traders would be in on the continuation move. Low of the day, redrawn, which is just layering on top, breakout pullback on top of the breakout. And then 1, 2, 3, 1, 2, 3 to the high, and we get a sideways price action at 50. Not quite an engulfment. This ends up being a 4-bar reversal. Some traders would have shorted this at the numbers. Engulfment traders would have been in down here underneath the final pin. You'll often see a final pin at the high that traps traders thinking there's going to be a continuation on the break of that pin for the move long, and they get in early because they've missed this big drive up, only to find out that the next candle puts them underwater, and if they lift their stop, they could be in major stress. We head into the US session. We showed this chart the other night. Pin hammer underneath of the original reversal hammer off the 00s. A classic measured move setup, high to low. That market went strongly through not only the low of where that move started from, but they went right down to the 00s for a 400 pip move down from the high. Again, average daily range comes into play. They exceeded the average daily range when they were at the high of the day. You can be looking for some sort of reversal back into the trend. And again, they've taken out the low of the session from the US session from the night before. Pins to the bottom off of 50, reversal candle, back through. And we'll just bring our numbers back up here. Sweet spots through the 00s, and again, aggressively coming back to stop hunt traders who were short on the hammer at the US Open. Both of these hammers were either stopped out with break even or a loss, and the market then consolidated at round numbers. So again, we head into the next day. We have a high, and Asia eventually gives us a low, and you can see where we would draw our 00 boxes now for the next day session. We have an upper 100 pip box and a lower 100 pip box, and we move into the next day. So again, we talked about traders getting trapped inside of the range. You can see where they trap volume inside. On certain days, we redraw our high and our low inside the market. Traders who may have recognized, we talked about this in the video, the first part of the video, asking yourself, is there potentially a high or a low of the day in place, and marking off the low bear candle and the high bull candle of your high and your low. And you can see that the high of Asia respected the low of the highest bull candle, and the range in Asia respected the high of the lowest bear candle. They put lower highs in place, which is a classic taking from the high, making lower highs, but not going any lower through the low of the day. That's our squeeze setting up potentially for a long trade out of a descending triangle. That market broke out, and again, Europe, London, strong breakout. No trade on the 15-minute chart in this breakout. Traders may have got in on a smaller time frame, but what we did get was the pullback. One push off of numbers, two pushes, pins starting to show up, a third push down, and there's our little inside bar bull hammer outside of our 12 candle window. But on a trade like this, we're thinking measured move, second leg. Not everybody would have taken this if they weren't on the screen, depending on where you're at in the world. But again, that market, then we take our low and our high, low of the trade candle that we're going in on and the high of that candle, and we're looking for a minimum of 1 times. And in a strong move, we've had a strong move from the previous session, following that market up for potentially at least 2 times the range of that move back up. Oops. And again, just looking at structure, so we have a descending triangle, perfect setup, consolidated inside the previous day's high and low, but above 50% of that day's range for the squeeze, the breakout, 1 push, 2 push, 3 pushes against the breakout if traders weren't in on the original break of that move. But again, you'll see the pins stop hunt of these traders, double zeros, pin hammer, measured move up. And again, just breakout pullback. US session, 1 push, 2 push, 3 pushes in a runaway trend. Pins again on the bottom, pin hammer at the 50 level. Traders would have been reluctant possibly to chase this. This is a very strong move though. This is called an always in type trade. The market is not going to come back. But again, the concept is just, again, structure, looking for any bigger geometry. Could have even possibly looked at this as a symmetrical triangle, but when we've got the flat in there, I like that descending triangle for the big explosion out after that move from the previous session's low. Structure, high and low of the day, round numbers, equity timings. US Open, pin hammer at numbers. Again, just start looking for pins, pin hammers, 12 candle window, all the things that will give us some insight into positioning ourselves with a 1 bar stop for a measured move. We head into Friday's session in a very strong market. Again, another example of a market that pretty much trended into the close. We're thinking second day trade for a continuation. Right off the bat, the market gave us again an engulfment candle off the low in that session changeover at round numbers at 50. Potentially a low of the day is in place. The market then proceeded to continue to trend upwards. From there, again, another smaller symmetrical triangle inside of another rising triangle. The market broke out. 1 push down into the Europe London Open, 2 pushes down, 3 pushes down. US session sideways engulfment pattern. At the end of our 12 candle window, 1 push, 2 push, 3 pushes inside of that range. We have an engulfment. We call this a snowplow when the pin heads north at the bottom of an engulfment. Just mark this off. Again, the biggest takeaway from this is I want you to focus on structure, round numbers, timings. These candle patterns that are showing up at the bottom of ranges in the continuations of moves, pin hammers, engulfments, measured moves. Again, we're in a rectangle now, a big rectangle sideways. Round numbers, a full expansion of those round numbers gives us a full measured move of that breakout. But we head into the US session last night. We've had wicks on the bottom. They've stop hunted traders who were long, gone up to 50, got traders shorting this market. So again, we talked about, I don't know why you would short a market like this right now. It's so strong. But looking for the easy charts to trade. These markets are very clean. Clean highs, clean candle action, creeping trend. We talked about that in the first half. 1 push, 2 push, 3 pushes to the low, but also bigger structure. 1 push, 2 push, 3 pushes into over the course of that trading day before we get a reversal engulfment with a pin hammer at the 50 level in a very strongly trending market. Trend, consolidation, continuation. That's all that was. So sometimes the market will lull us to sleep in a range-bound market. Pins, stop hunting traders, but be thinking timings, 12 candle window, round numbers, high and low of the session, pins. This engulfment reversal on a longer time frame is a pin bar, pin hammer, same thing. So again, positioning ourselves with a 1 bar stop, whether you positioned here, that market continued to move towards the redrawn high of the day for a breakout of that range, strongly moving in the direction of its target. So hopefully you got some value from today's video, traders. Looking to keep it simple. Again, structure, high and low of the day, timings, round numbers, equity opens, 3 push patterns, pins, measured moves for targets, maximizing profits on your winning trades, cutting your losses, 1 bar stops. Keep it simple, traders. Stay disciplined, stay focused. You're not going to get every single trade, but keep it simple. Stick to the outsides. Look for the simplest setups. Trade them. Learn from your mistakes. Trade them better. Scale it up in size and keep getting better. Have a great trading weekend. Study. Get better. We'll see you next week.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.